Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly here. Yeah. Good. Welcome back from the weekend. Hopefully everyone had a fantastic weekend. Hopefully everyone was able to rest up and get ready for the day ahead and all that fun stuff. And, of course, as always, before we jump on the right side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. Good morning, welcome. Also, I just want to take a second, like we do every day, to thank all of our new members, new subscribers, Academy students, VIPs, and everyone in between. Welcome to the SSFTG fam. I'm super excited to have you all on board. If you aren't part of SSFTG yet, there are a ton of different ways to join up. The easiest way is to join as a YouTube member with the join button right below the stream there. Gets you in the chat room, the YouTube community board, where we post stock and crypto chart posts, and a bit more stuff in Discord chat and all that, and a bit more just kind of behind the scenes and what's going on. Of course, if you want to understand how we do everything every day and what we do every day, check out the Day Trading Academy and VIP memberships and everything else waiting for you over at ssftg.com. So if you're here for the first time or the 1,000th, good morning, welcome. I hope you're all ready to rock and roll with me today, analyzing these crazy markets of ours, this week, today, whatever. Let's take a look at some news, take a look at some charts, see what all is going on for today. All right, let's see here. First off, don't forget to grab your morning DP levels. Those are posted for you every single morning on the Major 7. Nasdaq, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. Whew. Still got them running shoes on from last week. We're rocking and rolling. As far as the news calendar is concerned, we really don't have a whole lot going on. We have Powell speaking at 10:30, which, you know, whenever a speaker is on the docket, it's always kind of a not so sure how the market's actually going to respond to it, because really if it's a speaker, then well, it's going to take them a minute to say whatever it is that they're going to say, right? So it's not an instantaneous news announcement. Makes it a little bit awkward because it could be going on until like 11. You just have to be a little bit careful. So the news calendar is pretty light, but it is there. We'll have to wait and see what's up with it. Aside from that, we've got some pretty good movement across the board here, so we'll have to see how things want to go. Get this stuff out of the way, get the news running. Of course, the sounds in the background, if you are not familiar with what those are, that is part of Financial Juice and Tick Strike. We've got those loaded up in the middle in the top right, so we know at all times what volume order flow is going on, as well as what news is going on, so we're not stuck on the wrong side of things when news is coming out. That's never fun. Looking across the board, though, and seeing what's going on off of the Nasdaq first, and we'll kind of continue off of there. I mean, what are we supposed to say about this thing, right? I mean, really, what are we supposed to do with this? It doesn't stop going up. It's ridiculous. I mean, man, the low was at the beginning of October, and it rallied. I mean, it rally hasn't stopped. It really hasn't stopped, whatever you want to say. If we're looking at it from the perspective of a 60-minute, which is really the only way we can visually see what it is that's happening here, this is a rally that we've been talking about for quite a while. A big, monstrous blow-off on the high. Something that looks absolutely insane once they finally get the juice going. Whoops, I don't have my drawing thing going. There we go. So we obviously have it going. Wave 1, Wave 2, Wave 3. Right. So eventually there's going to be a Wave 4, Wave 5. But the question is, you know, how deep is Wave 4 going to go? Because that left behind Wave 2 swing, or Wave 1 swing, whatever you want to call it, back up at 15,000. I mean, at this rate, we're going to be up at 17,000 before we blink too much more. So, I mean, geez, that's a heck of a drop. The concern, obviously, is how big of a drop that's going to be, but as long as it stays above that point, technically, it is a valid impulse move to the upside. Might not feel like it, but this is an incredibly massive rally to the upside, and if we're looking at overall extensions higher, a lot of times those extensions to the upside create a 618 or some kind of Fibonacci deviation move to the upside. So if we go in and we load up the full fib structure, and we get this, oh, yeah, that's right, fibs are backward. Go from the bottom to the top. and we can kind of project out where this is kind of trying to go from. So if we move this up to the highs, we can see that we have, wow, that's a fancy line. Can you stop doing that, please? There we go. When we start migrating it to the upside, we've got the 1618, which did stall the markets for a little while, acted as a nice little back and forth support and resistance, ended up breaking through that, going up to the next area, breaking through the 224 like it didn't even exist, breaking through the 2618 like it didn't even exist. The next objective is the 314, and that's at almost 16,600 at that point. I mean, the amount of bullishness on this is just absolutely absurd. But that's a wave 3 for you, right? Wave 3s really start hauling, and man alive, if they start going above that 300, 3618 is next, and you know, that puts it up a little ways up into the 17,000s. We'll have to see. Crazy movement.
Mr. Lemaire, since we need to discuss the protecting of energy consumers.
What the heck is this on logarithmic? No, it's not. That's just how crazy that looks. That's insane. My chart looks nuts. What about a 60-minute? Does that fix the scaling a little bit? Yeah, there we go. So as far as the S&P goes, again, from a 60-minute perspective, hey, Brad, how's it going? And everybody else so far, good morning. We've got this upward continuation, and the S&P looks very similar to what we saw in the Nasdaq. Wave 1, Wave 2, extremely extended Wave 3, all the way up into the sky. So with this massive Wave 3, right, Wave 1, Wave 2, Wave 3, where is this thing going to stop? You know, here again, we have to kind of think, like, well, wait a minute. Where did this thing actually go off to? We had this first rally up. Why isn't this... This is not the right levels. Do I have a template? Great. Awesome. Well, those are useless. Let me try this again here. We'll have to do our full fib structure. And, of course, again, I always forget it's backward. There we go. All right. So as far as the S&P goes, we have the 1618, which did hold for a little while. We broke above that. The next area is going to be the gold 2618. We haven't quite hit that yet. So the S&P is, I mean, it's got a little ways to go. You know, I mean, all things considered, if we're looking at upside objectives, that's 4735. The Nasdaq is way more aggressively bullish than this has been. Maybe the S&P wants to play some catch-up. That could be really interesting. I mean, either way, we know we're in Wave 3 and this thing is screaming through the ceiling. It's just a matter of when it wants to stop doing that. Switching gears over to gold and seeing what's going on from the gold perspective. Pokey and spiky and choppy and nasty as always. Man, here again, we've got to step back to the 60-minute chart to actually see anything useful. The 15-minute charts, although they are by far my favorite time frame, they're not helping us so much as far as anchor charts go. We've got to zoom out a little bit further to the cliff and you know, maybe even out to the ozone, depending on the chart that we're looking for. Either way, the cliff just isn't doing it, so we've got to step a little further up on the or the hill isn't doing it rather, so we've got to step back further out to the cliff. And standing out on the cliff, we can see that, I mean, here on gold, this hasn't made a new low, it hasn't made a new high. We're just in a big wedge. You know, even from the hourly, we can hardly see what's going on here. If we go out to a 4-hour chart and zoom way out there, we can see the overall structure really was nothing more than a vindictive, like, definition of vindictive, but vindictive trap on the lows, and they went screaming all the way back up. But here's the thing, right? They couldn't break a new high. And, well, they failed, but then the sellers couldn't break a new low. Okay, well, now the bulls haven't been able to break a new high. We're lacking some serious proof here. I mean, as it stands, I guess from a volume perspective, we've got the first impulse up, and I got to catch this thing before it messes up. Switch it to minute. Where's the POC? Oh, there it is. We've got the POC, which is anchored right up on the top. Let me use red here. Held as resistance. And now we're back again trying to break through. If the sellers are going to lose their grip, this is the spot that they lose their grip. Right? I mean, this is it. We're on top of it. We're actually breaking through it. So they've got some buttery fingers hanging on to these. If we're looking at the pullback, we have the impulse. After the pullback, after the market had some time to respond, all they managed to do is create a pretty big pulse in volume down here, but the POC moved a little bit further down, suggesting that the sellers were trying. They were trying, and we run into some problems. Now, let's look at this, right? If they were trying and they failed, well, did they really fail? How badly did they fail? Let's measure this to a scalp. Oh. There's our answer. So it seems as though the sellers were short. They built into their move down. They had a very nice move down, but they could not achieve anything more than a scalper's objective. They came back. They re-upped into the short. They took back off at the scalp. They re-upped back into the short. Re-upped, exited, and now we see them obviously they're either underwater or possibly break even, possibly even flat, given this big wick back. If it does push down, it's very likely going to find support right there. So, from a very low probability standpoint, but a very massive reward standpoint, I say low reward. This is a 4-hour chart. I keep forgetting about that. They've got a zone of support, which would be a swing long at 72.3 with a 151 tick stop. Fits about a 3-to-1. So, but remember, this is a 4-hour chart, so this thing's way out in the sky. Looking over on the euro is continuing its way to the downside. Lower high, lower low, lower high, lower low. Ooh, higher high. Just kidding, lower low. They really couldn't do a whole lot on that quick little poke above the highs other than trap everybody and then just completely smash their faces in. We've got a new rotation to the downside. If we see how the market respond to that, first off, we've got the top all the way down to the low. The impulse, right? How did the market respond to the drop? Well, it seems like the sellers were pretty poised for that drop, given that the POC was all the way at the high. When the market started rallying back up into that move, we have a downsided POC, which would suggest that the sellers were trying to short into this move up. And they failed. They miserably failed. So as we progress this a little bit further forward with that sense, the market came back and those sellers exited at break even. It's important to note, right? That's a very important piece of the puzzle. So if the shorts were looking for shorts, they got out of their shorts and it tried to get the rotation back to the upside. Those bulls did have a new high and then got absolutely massacred. I believe that was on FOMC if I remember correctly. Either way, they have a very nasty chop through the downside, but that did make a new high. So if we go over into this high, the POC's hovering, and we finally have a breakdown to a new low. When the markets rallied down to a new low, everybody who was short, well, this is where they're going to re-up into the short to try to continue it back down. This is the spot. So, a lot of the longs just got juked real hard. They're now being given a chance to get out of break even. And we know they exited. We saw the proof. So the shorts were out, the longs got in, and then the longs got punched in the face. Right? They had to go to the ER for a little while. Now they've got bandages. They came back. Now they're trying to get those bandages off. The question is, can it go far enough to let them off? We'll see. Over on Bitcoin, monster rally to the upside. Big old pump back above the 64 halves. Now rallying into, wow, really, really nice move all the way up into the 66 halves. Really good momentum. So the 15-minute chart's looking incredibly strong. It would have been nice to get some kind of trap, but they ended up getting a higher low Ethereum style. All of them were higher lows, unfortunately. I was hoping for a quick little trap underneath the bottom. Couldn't get it. Hey, Maurice, how's it going? And Ace, everybody else so far, good morning. So Bitcoin's off to the races, is looking really strong. A couple altcoins had some nice plays, but Bitcoin didn't really offer up the trap. And then we've got Ethereum, which has the continuation, and Ethereum did what I wanted Bitcoin to do, and Ethereum didn't do what I was hoping it would. It was a total flip-flop. I wanted Ethereum to hold a higher low and Bitcoin to trap the low, because that's usually what happens. It looks like they switched places. Ethereum trapped the low, Bitcoin did not. Either way, we have the continuation to the upside. One of the important things to note here is that none of the confirmed swings have been broken, except this one. It was the only time a confirmed swing has been broken. That created a little bit of a wedge low. But ultimately, that did rotate back up to the highs, and that gives us an idea as to what the traders were likely expecting. We have an actual risk continuation to the upside for scalpers. Was there a response there? Yep. Well, I guess the scalpers are out. Pretty obvious what's going on here, right? So the scalpers are taking their profit. What would be next? Well, let's look at the actual risk. We've got the 2-to-1s, which would be next. The 2-to-1s would be right here, and the market is getting stuck on that at the moment for actual risk 2-to-1s. It's a very likely area of profit taking for longs. Expect to see a pullback. If it does continue up, then it'll probably keep going, but the next pullback might be a little bit more drastic, just because it's kind of icing on the cake. Nobody wants to give the icing back. All right, switching gears over into the Nasdaq and the S&P exclusively here, and kind of seeing what's going on. Overall, I mean, there's not been much going on from the morning session aside from just going kind of straight up. Really funky open. I believe there was actually a gap down. Right? Yeah. Now, can somebody confirm that for me real quick? Because I tried reloading my data, and my data still doesn't look right. Is that correct? Is that what it's supposed to look like? Because this looks wrong. I'll try it again. Whoops. But I just want to make sure that when my chart looks really kind of funky like that, yeah, that is what it's supposed to look like, huh? At least that's what my chart looks like. That's what yours looks like? Okay. Well, I mean, you know, it is what it is. We've got a really funky gap down that started started everything off. Tried climbing up, couldn't fill the gap. Slid down a little bit, couldn't break a new low. Sellers tried, but they failed. Rolled up, finished the gap, and now we're above the highs. It's a very important location here because if the bulls cannot get this continuing to the upside, it's very likely that we dive all the way down to a new low. Retest the base of that open down at 16,256. Oops. That is the low of the first 5-minute bar's gap down, and that is the high of the 5-minute bar, right? 17 quarter? Yep. So that is the first 5-minute bar after the open, the high and low of that. I kind of want to see, is the market responding to it? Yes, it is. Sometimes they'll use the first 15-minute, and if you were to put it on that, we can see that it just doesn't look as good. See how it's missing a lot of stuff? So it makes more sense then that they're looking at the first 5 on that gap down, just given the responses. So. And as far as the S&P goes, again, I think it is correct, but I'll reload it just to be safe. Yep, that is correct. Okay, so we'll pop that over there. Get that. Thickness of 5, gold, all charts. And again, we'll test it, which one is holding more responsiveness. We've got the first 5-minute, which has some nice support and resistance, or the first 15-minute, which implements both of these. And you know what? I'm going to use the first 15. So the S&P, the first 15 makes more sense. See how this one adds more responsiveness? We've got more tests and more proof of this being the high. So the S&P's got the first 15. Either way, same story. Looking to see if they want to get this continuation to the upside. Just about the same on yours? Okay, yeah. All right, well, thank you guys for confirming. I appreciate it. It's just, I like to be, really sure when my chart looks kind of wishy-washy like that. But seems like we're all systems go. So got the open in about 11 minutes. As far as the open from the beginning of the day only, they started off with kind of a pretty weak cycle, I gotta say. It's pretty nasty looking. Gross. There's not really anything inside here that looks good enough. Yeah. All right. We'll see what they want to do. Oh, and side note, I updated the bottom right. How does the color look? Does that make it a little bit easier? It's not that white CFTC rule. It's a little bit smaller, but I think it's still legible, right? It's still, you're still able to read it. But that way it kind of fits everything else instead of a giant glaring white box. Speaking of, hey, there's one. The alarm clock goes off. Good timing. Market's pushing into the highs.
Connection lost.
That's not good. Connection issues. Nobody wants connection issues. Hang on 1 second. We have 10 minutes, and this is a good time since we have the open around the corner. I'm going to save my workspace. I'm going to reload Ninja. I'm going to get everything with a fresh start here, because it sounded like it was having connection issues anyway, so we'll give it a fresh start. Hey Caesar, how's it going? Good morning, good morning. Sorry, give me 2 seconds. Just getting the getting Ninja restarted. Had an issue with it or something happened, I don't know, but I get it, it's Monday. Alright, sorry, give me 2 seconds. I gotta get reconnected back up to everything. Happens to you all the time, yeah. I feel like it, man, some days are better than others. You know? Maybe that's just what I get for kind of living a bit more out in the sticks, but whatever. Alright, I think we're good to go. Let me reconnect to Coinbase. Get that swapped over. Make sure the data's working, charts are moving. These charts are moving. Good. All right. Sometimes I miss Sierra charts. Man, I tell you. The old days, back with AT-Trader on the side, right? Ooh, baby. I don't even think it's called that anymore. Well, what is that now? I'm dating myself now. That's probably like 12, 13 years ago? Sheesh. Bull's getting continuation of the upside. I got about 7.5 minutes until the open. Sierra's still around though, right? As far as I remember, they had some of the best order flow around. I don't know if that's still the case, but Ninja's come a long way, and it feels like Sierra kind of hit the pause button. But so does MetaTrader, to be fair. Like, ooh, the new launch of MetaTrader 5, and it looks like Windows Windows XP 0.2, you know? Like, bro, you couldn't upgrade the graphics just a little bit? Are they doing good? Dome's 10 times better? Okay. Maybe I'll have to check it out, man. Ninja's been giving me a hassle. But every time I want to switch to something else, you know, it's teaching an old dog new tricks. How long have I been using NinjaTrader now, you know? Man, that's tough to break that habit. I'm all game for new things, but that's one that'll definitely throw you out of your element when you swap to new charts. Or like when the data goes out and we have to use Meta on the side just as a backup, like, woof. You've been using it since 6.0? I believe that's earlier than me. The earliest I remember, I think, is 6.5. Or maybe it was right when they were switching to... I don't remember. 6.5 was solid. 7 was... Oh, man, I'm glad they rushed out 8. That's for sure. 7 was not so great. Been using it since the Lincoln administration. Oh, man. And the graphics reflect it, too, boy. Man. That's not far off. Just started using NinjaTrader 8 from Tradeovate. You hate it? Yeah. From Tradeovate, too. Tradeovate's super flexible. Massively flexible. That was one big thing that I did notice when I was messing around with it. You could do, like, anything you want. But, what's the other one? TradeStation is another one that's similar. You've got to have some coding under your belt, but TradeStation's also super customizable. Got the open in 5 right around the corner. Big time slot next up is going to be 928. 928 is the drop dead before any modifications of at the open orders. That happens at 928, so there's usually a little bit of a bump. As far as the overall back and forth that's going on, I mean, the cycling is... It just keeps going straight up, but we've got an L4 off the lows, which rotated up into a high off of an L2. It's a little bit disappointing. Like, an L4 is a higher, deeper low, if that makes sense. You usually want to see them hold like L1s after something like that, but they didn't. The next response, is it going to be disappointing? Well, they slam through the top. So the buyers held the L1. We continue back up, and now they start holding off of the L1s really close to that L2. Yikes. This is, you know, again, this has got me concerned that a deeper pullback makes a bit more sense. Maybe even an L3. Right in the lower side down here. Look at this pocket of wicks down here. It's just begging. It's tasty down there. We'll see. Market's coming into a little bit of a dip. I'm not going to be super interested in the L1 right out of the gates. I mean, I know we've got 928 and some volatility that may help it out. Yeah. Oh, yeah, E-Signal. I totally forgot about E-Signal. That's another one, too. There's some pretty good charting platforms out there now. Thank goodness. Ninja needs some competition. But then I'm reminded as to how good Ninja is when you try doing other things, like trading on Femex and trying to get that working from an intraday perspective and scalping off Femex and all of that. Like, man, you can definitely feel there's still some limitations, you know? It's got a little ways to go, but we're getting there. Man, could you imagine NinjaTrader launching a web-based version? Whew. That'd be spicy, but they got to do it right. If they do it wrong, that could cause some serious problems. That'd be a game changer. It kind of sucks because I don't really want NinjaTrader to be the game changer. I want something to give them some competition, but yeah, that'd be nuts. Then, you know what would be a game changer? To any brokers listening, and I totally understand. There's a lot of red tape. I get it. I'm just kind of poking fun at the bear because I know they probably wish they could do it too. Being able to fund futures accounts with like debit cards instead of like a wire transfer that takes a week and a half because you forgot to do it during the week. So you do it on Friday, but it was a half hour too late and the banker tells you, oh yeah, it's not going to get there till Monday or Tuesday. I've never been there before. You know, just waiting for that day. I mean, seriously though, could you imagine being able to fund a futures account with like Bitcoin? Holy moly! Talk about a spike in Bitcoin's prices. Whew. You can use debit on Tradivate 300. Can you really? I did not know that. That's awesome. Ninja's got to step up their game, man. ACH transfers, yeah, but that's still like 2-3 days, depending on the bank, I guess. This is the day of now. You know, I want it yesterday. Unless you're sending Ethereum, then it's going to cost you $2,000. You're sending $50? That's $700 to send. I might have to recheck out Tradivate. 300 men on with debits. Interesting. Yeah, I know, right? Waiting for checks in the mail in 2021.
ECB's land says including OOH would mean higher rate of inflation than we are currently seeing. So that's just ECB's land saying including OOH would mean a higher rate of inflation than we are currently seeing.
All right, coming into the open around the corner, I would really love to see a flush down to the low L2s or L3s at the open for the buyers to pick up the dip. The concern is that we get a little bit of a larger rotation. But deep L2s, L3s, that's where I'm thinking. Right now, at least looks interesting. Of course, every time I say that at the open, it never happens. But we'll see if they can at least get down to the L2s. Tag settlement. Ooh, big flush to the downside. I did not get filled on that pulse, obviously. Jeez. I noticed it about, I don't know, a human amount of time afterward. Did not get the fill on that bid. See if I can grab the secondary pulse to that lower L2. And scalp out of that dip. They gave me the secondary, thanks Nasdaq. Only a chance to grab one, but a nice little flush down into that low. Holy crap. Missed that first time around. Was not even close to fast enough to hit that. I tried. I did try. Alright, well, we got the lower L2s, a little trap underneath the base. Couldn't get down to the L3s. Only gave me a chance for one and a quick scalp. SOCKS, right? As long as you can spell socks. Beautiful bounce to the upside. Bulls will be looking for a continuation on this to see if they can follow through. Yeah, we've got that FOMC level down there too. I mean, we've got the gap down. There's a few things of interest. You know, man,
says we didn't expect
that 15-minute chart.
Supply shock.
Ooh, that 15-minute chart doesn't look happy. Oofda. That's, man, I don't know. This next candle, how this next candle closes on the 15 is going to be pretty important. The bulls need to step up to the plate because this could be disastrous. That bear bar trap on the top like that? Yikes. Bulls trying to step back up to the plate and get a continuation move back to the upside. I'd like to see a dip down into the lower 350s for bulls to re-up, though. Way up here is a little bit too far off the mark. 50s, 45s, somewhere back down into a zone that's a little bit more favorable for bulls would be a lot more interesting. Of course, the bulls know that, too, so they might not let that happen. Something to consider, I suppose. The S&P is stepping up to the plate with heavy bullishness. Let's see if I can grab this little bid move down here. Woo! Wow, that was a terrible fill on that second one. All right, that was a lot of volatility. I'm going to reduce my risk a little bit at break even on that. I had an absolutely atrocious fill on that ad. Let's see if they can pump back up through the top. I got top asked. Whoops. Oof. And when I went to sell another one, I accidentally shorted. Let me just get me out of that thing. Let's take a breather for a second. Holy crap. Whoa. Now, wait a minute. Fingers off the keyboard. Fingers off the keyboard. No, sir. We got a lot of volatility. I hit buy bid. I got filled at least 20 ticks off from where I wanted to. I've got to let this pass. This is not my playground. This is Algo's playground. We have to respect them. Otherwise, they're going to rip your face off. Let them get it out of their system. They want to get a little bit of a dip underneath that last bull bar or something. I'll look for another possible entry to the upside, but I've got to be a little cautious here. Whew, lordy. Accidentally went short when I was trying to get out in that little mess inside there. It's, again, you got to take a little bit of a breather. Right? I know it's a lot of action. It hasn't even been 5 minutes yet. But when you start getting slip filled, when you're buying bids, selling ask by like 15, 20 ticks, time to take a pause.
Physical reader says full employment has to be consistent with price stability goals.
Let the market do its thing.
Not a number we are aiming at.
Let it get its herky-jerkus out. There's a reason that term exists. Now, while the Nasdaq is herky-jerking around, the S&P is going to be the calm boy, usually. So let's swap over, see what the S&P is doing. Beautiful little pocket of wicks building up here at the 475s. Looks like buyers picked it up really aggressively off the fours. got the first 5 minutes in. First 5 minutes is in. POC on the S&P 4705.
Coming out of the US recovery, the labour market is much closer to where it was in 2017 rather than in 2011 or 2012.
And on the Nasdaq, 5275 is the first 5. S&P left behind some funky gapping back here. I gotta say, I'm pretty interested down there at the 150s. The problem is, I don't know that it's gonna fill it, so I'm gonna put it at the 75s. See if you can grab a couple. Not so sure I'm even going to get that dip, but while I'm waiting for the S&P, let me take a look at the Nasdaq, see if it's calmed down a little bit. Actually, you know what? I am totally fine leaving the S&P on the 5-minute over here and just letting it do its thing. Well, the buyers did pick it up off that lower L2, as expected. Wish I would have gotten more than one. It just literally didn't give me a chance. More continuation to the upside, keeping it going. Beautiful shelf on the S&P beginning at 175. It's probably going to be there for quite a while. Nasdaq seems like we've gotten out of the algo territory a little bit. It's not so jerky. We're still seeing it jump around a couple points at a time, though. So, still, got to be a bit cautious. Yeah, see? Buyers will pick that low move up. It's really hard not to scalp when it's in algo territory, but you got to understand the dangers. If you've traded in algo territory before, you know what I'm talking about. It looked like a good position, I swear. In 1 second I was up 50 ticks. Next second it was just all gone. I don't know what happened. Danger, Will Robinson. Big VVP void over on the 350s on the S&P. Buyers may pick it up a little bit ahead of that. And the 350s are, I mean, where is that? That's right underneath the last swing, too. Man, it's really hard to not like that, huh? Alright, but I'm going to offset the second entries, though, because common sense. And I'm going to move the other ones down there. I'm going to approach it a little bit differently, though. S&P makes a little bit more sense up at the 350s for a quick little bounce for scalpers up, but if it does want to take a deeper, ow, bit my tongue, a deeper dip down into the lows, 175 is that area of interest. Two minutes until the end of the second candle of the day. Hasn't even had 2 candles today. Sheesh. Seems like a lot of profit taking going on in the Nasdaq so far. I'm going to back off the 350s on the S&P, and I'm going to wait. I like this shelf. I like this shelf a lot more. I know there's a VVP there, but it's just not enough. It's not enough room for me to get anything other than a scalp, and I would rather just get the greedier entry. If it doesn't fill me, it doesn't fill me. I still like it down here. I think it makes more sense. Nasdaq with a holy moly. Okay. Taken in on the S&P. Got a little bit of volatility there. Yeehaw! All right. I'm going to go for a point total on the whole move because obviously that was unexpected. Not necessarily anticipating that to go diving all the way to the downside like that. But in the event that the longs do not get out, I do want to implement a hedge short on the Nasdaq. There's way too many traders that would have gotten trapped on that to not see it potentially pulse down for these shorts. So I do like the Nasdaq for the down move. I think the bulls were taken off guard, myself included on the S&P. I wasn't expecting that. So the implemented hedge to the downside makes a lot of sense for the Nasdaq. See if I can get a better fill on the ask. Sell back into the highs.
Connection lost.
Okay, it said connection lost, but my charts kept moving. I wonder if it's Coinbase. Testing the exit on the S&P. Did not fill. Like I said, I think a lot of traders are looking to jump ship here, which is why I have a hedge to the downside and probably why we're having a tough time getting filled there. All right, jumping out of the Nasdaq as well. The hedge is no longer necessary. And out on the S&P. Jeez, what a crazy move on the S&P. Holy moly. But we can't even use the S&P as a safety net. Okay. Well, so we're left with one of two options. We are left with one of two options because obviously our shelter, quote unquote, shelter market was taken away. The S&P was supposed to be the less volatile, safer market. And it just swept in 4 contracts for a scalp long like it didn't even matter. It hammered down. So we're left with a choice. The choice is we either stop trading and take the risk off the table and just say, you know what, that's not worth it. That is a very valid response for a lot of newer traders especially. It's not worth the risk. It's not. Imagine if that had 2 pulses to the downside and you were looking for a long and you're not prepared for a move like that. You don't know what to do in a move like that. You shouldn't be trading it in the first place, but you know what I'm saying, right? Imagine it pulses down. Now you're negative 20 ticks on 4 contracts, and it pulses down again, you're negative 70 on 4 like, what do you do, right? Those are the risks that you have to think when you're trading these types of environments. Remember, algo territory, they'll rip your face off. If you thought I was joking, hopefully that opened your eyes. The other option is that we trade through this volatility with pure volatility scalps only, because that's the only thing that fits. That's where the gas pedal goes to the floor. Now, only for the experienced, and you have to understand the risks, right? The risks involved, you just saw it. In an instant, gone. I was just joking about it. I didn't want it to actually happen, but there it was. Just I'm glad I went for the deeper entry. Sheesh. All right, a lot of longs that were swept into that move have been given a chance to get out of break even, which means that the follow through to the downside is likely going to be a bit more vicious and likely a bit more follow through of. But that said, this whole candle, remember the 15-minute bar that we've been talking about? Look where this candle is right now. If this closes down, that's a gigantic bear engulfing candle. And if it closes under settlement, that's a problem for bulls. So the bears, they've got like a minute. They have 1 minute to really hammer this thing down. The bulls know that, so they need to push back. This is going to be a slugfest. This is like Mayweather Tyson, right? See what they want to do with it. Bears are attempting to press to the downside back into the settlement point. That settlement point is going to be a zone of interest for scalpers to try to buy it and pick it back up. But remember, the longs are scared. I'm not interested. The only thing the longs have is that little trap underneath 42.
Basically, it says we want to have a robust assessment of inflation expectations.
A strong bull bar here. They close it as a doji on the 15-minute chart. Side note.
It's very important to look at prices and wages.
I don't know that I believe a bull bar here. I think it's a false trigger. I'm looking to short into the Nasdaq, triggering the longs. Looking for the continuation pulse back to the downside. Got him. Fish on!
Empirical relation to inputs and price inflation has.
You just got to jiggle the bait a little bit. Make sure they take it. Rip them out of the water.
Clarida says it's crucial going forward that wages that are adjusted for productivity are consistent with inflation expectations.
Don't try to go long when it's a terrible spot to go long. That's the point in that lesson there. See if the bulls want to take it a second time around, but I think they kind of realize the error of their ways, and, well, we'll kind of see what they want to do with that. Closing as a doji didn't really help anyone, but they did close above settlement, so the bulls, I guess, gain a little bit of a tilt. I've got to give it to them at least. And now they're defending that area, so, you know, again, a little pulse underneath that last bull bar. It's big enough to assume that bulls might try to pick it back up for a scalp. Not enough time left on the candle, though. Too bearish. Whew, man, that's a bear bar. Holy moly. See if they can get above that bear bar's high. Selling volume coming in heavier on the S&P, and the Nasdaq is already pressuring down. Whoa, 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 hold on. I was going to sell ask there. Did you see that bid ask get real wide? Something's happening. I'm going to lay off a little bit. The time and sales offered up a big clue there. Right when I was going to tap the button, that thing spread out real wide. Can the sellers take it back? What was that weirdness that happened inside there? Okay. Sellers, okay, well, hang on now. Whoop, bulls picked it back up to the upside. Man, this thing is slippery. Sheesh. I don't necessarily believe the bulls triggering here is a trap. I don't necessarily believe that. They're going to have to prove it to me.
£3.51 billion.
Yeah, see, it's just the sellers tried too many times and they got juked. The sellers were the ones that ended up getting trapped. Alright, so the sellers are still stuck. Likely earlier longs, remember where we are, right? The earlier longs who tried buying into the move that didn't necessarily want to buy into that move, that happened on them real fast. So where are they, right? Where are they stuck from? On the initial pullback down to the lows, it seems like they built a base. Well, this whole area is where they all got swept in from. It's one giant dive. Now they're starting to crack back down again. Oy. Okay, the POC's still under the current market. Technically. Man, hanging on by a thread. Ooh, sellers closed it underneath. Not seeing or hearing really any selling volume coming in, though. Above this last bear bar. Nice little opportunity for shorts to try to pressure back down again. Beautiful flush. There it is. Got him. They just had to get above that last bear bar. Beautiful move back down, back underneath the POC. Another possible follow-through slide down through to settlement. Man, gorgeous. They're playing these traps like a fiddle right now.
Consumers don't see higher prices long term.
You just got to wait for them to set up. Got 10 minutes until 10 o'clock, right around the corner. Nice little breakdown to another new low. Only able to get one contract again. I'm just going to have to start spamming the button. Kramer it up. Sell, sell, sell. Secondary pulse up, but this is also after a new low.
Nominal rate is above 0.
I'm a little less impressed by this one. I have tempted to see if they can pierce back up above the 55s. That's like a twin reversal right off the low. That's too aggressive.
0.
Bulls continuing back up and piercing back above the POC, and a lot of the shorts will have lost their grip on that move, expecting the market to roll back down but not getting it. Looking for a continuation pulse on the bulls. Basically, the shorts looking to try to jump ship on this next continuation move back down. Bulls utilizing 5-minute support as a zone of interest. Unable to get the continuation down, retesting the twin reversal low. Bottom bid area for another push back up. I'll lighten the risk just a little bit. Couldn't get that next one underneath the low. Next cycle back up to the 54s or possibly further up is the zone of interest. See if they can follow through with a little bit more juice and break through those 54s this time around. Beautiful bull bar to get the job done. Can they follow it through? This time I got more than one Nasdaq. Let's go! Bruh. Really? Yeah, okay. See if they can vindictively trap underneath that last low. Snap underneath the base for a re-up back to the upside. And then also, the S&P is coming back to its POC, which is being freshly created at 4,700. What a horrible spot. Big pulse to the upside. Right to the break-even point. So I'm going to look to sell on the S&P as a hedge. Yep. I was going to say, that looked like that was a stop run. All right, nice little flush back to the downside. See if they can fill me on the bid for the S&P. So I grabbed the hedge back to the downside on the S&P for that continuation down. When they test those break-evens like that, it's pretty straightforward what they're trying to do. I'll keep re-implementing the hedge to the downside because the squeeze might not necessarily be done. And I'll let the Nasdaq hit the squeeze out of its system. If they do want to jump all the way back up, then my entry point for the Nasdaq is very non-optimal, but we went back down to 17.25. From a scalper's distance, I suppose, it doesn't really offer up much, but that would be back up basically to settlement. Now what I would rather do is liquidate a little bit on this move down, or move up rather, and then buy more on a move lower to try to get a slightly better average. That also brings my average down. I do have to eat the loss ahead of time, but there we go. Nice little slip underneath the base. That puts my average in a significantly better location. $39.25. Let me get this off. There we go. See if they want to get the pulse up from here. Or if the S&P is just going to continue down and grab the scalp. If it does, then that will be at 97. Nasdaq, nice jump to the upside, but they've got to follow through more than this. Holding support at 17 quarters so far. Not really doing much else. Here we sit. 10 o'clock right around the corner. Feel free to get those questions in. We'll get those covered for you. Nice little dip for the Nasdaq to try to grab an additional one there. And that will allow me to off one if we go back up towards these highs again. Get the average a little bit further down. Where does that put the scalp? It doesn't do a whole lot. Gets it close to that previous low. There we go. And now, 2 to 1, still not inside settlement. Dang it! I thought I did enough work. Ah. All right. I'm going to reduce most of them then at that point. And, oh, hey, and the S&P got me down there, huh? Wow, thanks, S&P. All right. Well, would you look at that? Got a little more continuation back to the upside, looking for the final follow-through. See if they want to follow around this time. Grabbing a couple more scalps off that break-even point, because very likely, now that we've developed a base, buyers and algos will defend that point. And I'm also trying to strategically get my 3 to 1 inside settlement. Ha! I finally did it! My 3 to 1 is inside settlement. Alright. Finally got it. Beautiful pulse back to the upside, pushing into the 2 to 1s. Breaking through the 2 to 1s. 3 to 1s are just a little further up. Nasdaq bulls still coming in. Bulls pressuring back to the upside. That upside target up into the 45s, back up towards that settlement area. Too much profit taking into the 2 to 1. I'm going to jump ship at the 2 to 1. See if they want to get a reload, dip back down in towards the 27. Of course, as soon as I get out, the stupid freaking thing jumps. You vindictive SOB. Oh well, good timing. 9:59, right? 10 o'clock right around the corner. A little bit of a vindictive morning so far, but making it work. We already know that it's an algo morning, so it's scalps and scalps only. Aggression, hit the gas pedal, or go away and stay away from the gas pedal. I think a lot of the bulls will have filled their objectives on this move up. They've been trying and trying and trying and trying and trying. I don't think there's going to be many more bulls to support the market anymore. All right, 10 o'clock hits. So that's going to do it for the morning session. I'm not seeing any other questions coming in either, so perfect. So overall, that'll do it for the morning. All things considered, ending okay. I mean, it was definitely a vindictive morning, but let's see here. Between all of the trades, took a total of 25. 25 total trades, 64% accuracy, 19 average win, 33 average loss, which again, we already know it was a scalping day. That's kind of expected. And in terms of the largest winner, largest loss, they're pretty close to one another. I know that I ate a couple losses on the way down because, again, we weren't expecting that flush. So the numbers kind of reflect what you would expect to see on a day that kind of took you by surprise. Let's see how it all plays out, though. Always good to see. 64 minus 100, 36 on the loss times 33, and then 19 times 64 minus 1188. Yeah, it's a relatively difficult sort of break-even day. Mildly above, but difficult day. And you can see it, right? Kind of makes sense from what we saw. Let's see if we can pump the numbers up a little bit more as we go into the extended session, though, and get things on a little bit of a brighter path now that we know what we're dealing with. Overall, though, made the morning workout pretty well, all through its vindictiveness. Hopefully you had a good morning as well and didn't get chopped up too bad. Thing was jerking all over the place. If you have any questions, of course, you can drop those in the comments below, or shoot me an email if it's a bit more detailed, jhb@ssftg.com. Until then, though, that'll do it. Rest up, enjoy, and we will see you all tomorrow morning, right? Have a good one. And for you on the extended session and VIPs, just hang tight, listen to myself talk, and yeah, we'll see you all then. Thanks. Bye.